Okay, everybody, here we go. It's me, Gregory Mannarino, Friday, January 5th, 2024. I know what you're thinking. I know exactly what you're thinking because you are watching the debt market, more specifically the 10-year yield. Forget about it. Forget about it. I know it seems kind of ominous, but look, unless I am completely, absolutely wrong here, and I don't think so. I really do not think so. Don't let this rattle you. The 10-year yield is firmly over 4% right now this morning. I discussed this phenomenon yesterday. I even said it's possible we could go over 4%, but I just don't buy it. I don't think, in fact, I am sure that central banks are not done. They're going to continue to buy it all because that's their goal here. We are going to see rate cuts moving forward. There's no doubt about it. It is an interesting thing to see, but it's not going to last, people. So I'm going to say this. What Greg Mannarino is going to be doing here is buying on the dips, obviously. I mean, this is so in your face. We've seen it time and time again. Many people have called me out on this one saying, Greg, you're wrong. But here's the situation. Every single time, you go back as far as you want to go in history that we've seen a jump or a spike in bond yields, it puts pressure on the stock market. This phenomenon really got started with quantitative easing 1 and then moving on to quantitative easing 2 and Operation Twist, and the Fed's still in here buying it all. They're not going to allow this to get out of control, in my view. It still could go higher, but I'm not going to rattle. Nobody here, not one of my lions better rattle here, all right? We stay cool. We're calm, as calm as we can be, because we're so hedged. If you've been following this blog, you got this covered from every freaking angle. We're ready for whatever they want to throw at us. You got it? So is this a cause for concern? And I know. I don't think it is, I'll be honest with you, but I know you're watching that 10-year yield. You're watching the MMRI, Mannarino Market Risk Indicator. Link in the description of this video. Free to everybody. Yes, it is moving higher. I don't think it's going to last, people. So look, I still believe that this environment remains risk on. And let me give you another little piece of information here. We just found out this morning that bankruptcies, and this is no surprise, or at least should be no surprise to a single one of you that follow this blog. Bankruptcies here in the United States are skyrocketing across the board, up 18% year over year in 2023. And I'm going to tell you something else in case you don't know. This is going to be the trend for 2024 as well. This is deliberate. I don't want to cover this again because it's getting ridiculous here. This is people here in the United States and around the world. Listen to what I am telling you. If you are a member of the middle class, you have a target tattooed onto your face. You may not see it if you look in the mirror, but it is there. This is deliberate. This is what central banks are doing. They're hell-bent on creating a neo-feudal system. That's what this whole thing is about. And that's another reason why I believe the stock market is going higher. This is an opportunity, in my opinion, yet again, and I've been telling you this for I don't know how long, to buy this market at lower prices. Now, I'm not saying this is cheap. This market is so overvalued. It's even hard for me to get my head around it. I don't pay attention. Look, what do we know for a fact? The fundamental factors that used to matter don't matter anymore. Forward guidance, PE ratios, stuff like that just doesn't matter anymore. It's all about the promise of easy money. It's on speculation that the Federal Reserve is going to continue to pump this market with more easy money. Again, who owns most of this market? The 1% and 2%ers, and they're always the first ones out of the gate. Who be smarter or cheat. We don't cheat, and I think we still need to stay in this market. Look, I don't know how many of you, and I would believe it's a lot, are on the same page as I am, believing that central banks are not done. They're going to continue to prop this up. They're going to push bond yields lower here to leave that door open for cash to make its way into the stock market. Let's not forget, this is a presidential selection cycle, the illusion of the market, the wealth effect, I'm paper rich. This is huge. This is huge, and they're not going to let it go here, at least in my opinion. Anyway, so I want to hear from you. What do you think about this economic news? Are you surprised? Are you shocked to find out that bankruptcies are skyrocketing across the board, up 18%? I was looking at it this morning, 18%, and this year over year, and this is going to play out to a much more dramatic way in 24. 24 this year, and I beat this to death at the end of last year. Everything I look at, everything I study, is telling me that you and I are in for one heck of a wild ride here in 2024. But we got this covered. Again, I don't care what they do. It doesn't matter. We're ready for whatever comes here. Is the market going to melt down? Great. Let the market melt down. We know what's going to happen. Cash is going to go risk on to risk off. You and I both own commodities, and I would hope some of you, a lot of you, at least have some cryptocurrency in your portfolio, because I believe this is where cash is going to go. Commodities in a big way. Cryptocurrencies as well, mostly in massively suppressed assets. I'm going to say again, silver, my favorite asset, physical silver in your hand. The paper derivative has been pulled all over the place for many, many years. You and I are holding this stuff, not because we feel like it's going to go up tomorrow or the next day, because we realize debt market implosion is going to happen. Is it happening now? I don't think so. You are clearly entitled to your own opinion on this. A debt market meltdown is going to look like this. We're going to get 25 basis point jumps, maybe even more so, on a daily basis. And that's going to put so much pressure on the stock market. People are going to know this is it. Again, you got the mainstream propaganda and pretty much every single YouTube channel telling you to focus on the stock market. This guy's telling you to ignore the stock market and look at its driver, which is the debt market. If we can get a handle on that, we don't have to guess really as to when the big one is going to occur. Is the big one going to happen? Yes. When? I don't think anytime soon. After the presidential selection cycle, anything can happen. But they have to get us through this year right now. You understand? They have to maintain the illusion of the markets. And I think that's where we stand here. Anyway, looking at the market this morning. Yes, 10-year yield firmly over 4.04 last time I looked at it with the 10-year yield. Don't get rattled. The dollar on a relative strength basis is higher. Again, trading doesn't start for about an hour and 15 minutes. This could change. We'll see. Gold and silver mixed, not doing too much. Cryptocurrencies in aggregate mostly lower, except Bitcoin. Bitcoin is catching a bid. It's around 44,000. Crude oil getting a bit higher as well. And stock futures are lower on the back of this this jump. I don't even want to say spike, but it's kind of a spike with regard to the 10-year yield. So what are we going to do, you and me? What are we going to do about all this? Understanding the situation, the economic story globally is going to deteriorate much faster from here, okay? And in my opinion, that's going to drive more cash into the stock market. I know how crazy that sounds, but there's no connection anymore between the economy and the market. It's just not there at all. I think the situation right now is ripe for a false flag to occur. Something out there to drive cash. Because you know how this works, okay? A false flag event would... Although this is all a false flag, okay, the war, expanding war, this whole thing here, this is going to drive cash into the perceived safety of debt. The Federal Reserve has weaponized the system to such a degree that they can order a false flag event to occur. They pull the strings. They are the puppet masters. Again, the Pentagon works for the Federal Reserve. They don't work for whatever freak is sitting behind the Resolute desk. They work for the Fed, who provides all their funding. You understand? Okay, so understanding that, you know, the generals gathering in their masses over there, they are planning out not only what false flag is going to occur, but how they're going to sell it to you. You understand? This is a multifaceted game. And nothing is what it appears to be. It's always the same story. All right, this guy here, people, loves you a lot from the heart. I hope you got something out of this. I want to hear from you. Do you think I am wrong? Do you? And it's okay if you do. I want to hear from you. Do you believe that right now we are going to start to see 4%, 4.25%, 4.5% on the 10-year yield? Are we about to see a massive spike in the MMRI? Are we going to go back over 300 anytime soon? If you believe that, lay out your case, because again, I am not too old to learn a new trick. And as far as I'm concerned, this blog is our thing. It's not just my thing. And if we put our heads together, all right, we can better gauge as to where this is all going to go. Me, you know my take on it. They're not done. We're going to see rates drop. We're going to see yields drop. We're going to see some kind of event occur that's going to push cash into the perceived safety of debt ordered by the Federal Reserve, who is the government. They run it all. You understand? All right. Love you a lot. See you later. Live stream, 4:05 p.m. Eastern time. All right? So let's do this. I'll see you later.